$93 trillion. That's how much money moves through ACH every single year. And most people watching this can't even tell me what ACH stands for. Look, there are 5 highways for moving the same dollar between US banks: ACH, Fedwire, RTP, FedNow, and SWIFT. And 4 of them ultimately settle into one piece of infrastructure that is over 100 years old. In July 2023, a guy named Mark Gould did something the Federal Reserve hadn't done since 1918. He launched a brand new payment rail, the first one in 105 years. So yeah, let me give you the full story. So here's what every payments video glosses over. When somebody says a payment moved between 2 banks, what actually happened? The dollars didn't get on a truck. What really happened is this. Each of those banks has an account at one of the 12 regional Federal Reserve banks. That account is called a Fed master account. When a payment moves, one master account gets debited and another gets credited. That's it. The dollars never actually go anywhere. And here's the structural truth nobody points out. Roughly 9,000 US banks rely on this one mechanism. The Federal Reserve Act of 1913 created the system. The 12 reserve banks opened in 1914, and every payment rail we're about to talk about routes back to those master accounts. ACH hits the master account. Fedwire is the master account. RTP and FedNow both pre-fund or directly credit it. Even SWIFT messages tell some bank to move money on Fedwire or on correspondent ledgers that themselves clear through the Fed. So why does this matter? For about 105 years, the Fed had near total control over how dollars cleared between US banks. If you wanted speed, you used Fedwire. If you wanted cheap, you used ACH. Either way, the Fed was the gatekeeper. And yeah, CHIPS exists for big wholesale wires, but even CHIPS settles its net positions through Fedwire. So even the alternative isn't really an alternative. Until 2017, the Fed had no real competition. That's what changed. Okay, first one. Fedwire, launched in 1918. Originally a Morse code telegraph system that let the 12 reserve banks transfer reserves between each other. Today, Fedwire is what the industry calls a real-time gross settlement system. Every transaction settles individually, in real time, and once it settles, it's irrevocable. And the numbers are honestly absurd. In 2025, Fedwire processed about 212 million transfers, totaling roughly $1,100 trillion. Yeah, a quadrillion. Average wire, 5.4 million bucks. So Fedwire is the rail banks use for huge wholesale positions, corporate payments, security settlement, the high-value backbone. And in November 2025, the Fed expanded Fedwire's operating hours via a Federal Register notice, pushing it closer to round the clock. Now the second rail, ACH, Automated Clearinghouse, launched in 1974 by NACHA, a private bank association, not the Fed itself. ACH is the opposite of Fedwire. Where Fedwire is real-time and individual, ACH is batched and settles in waves through the day. Slower, but way cheaper. In 2025, ACH moved roughly $93 trillion across 31 billion transactions. Your paycheck, your tax refund, your Venmo transfer, your mortgage. Almost every payment that touches a normal person's life rides ACH. So Fedwire is big and fast and final. ACH is small and cheap and reversible. For half a century, that duopoly was basically the entire conversation about US payments. And if you ever waited 3 days for an ACH payment to clear, you know exactly why the duopoly needed competition. All right, SWIFT, Society for Worldwide Interbank Financial Telecommunication, Belgian cooperative, founded 1973. Connects over 11,500 banks across more than 200 countries. And here's the part that gets everyone confused. SWIFT does not move money. I want to say that one more time. SWIFT does not actually move money. It's the messaging layer, basically secure email for banks. When your bank sends an international wire, Your bank sends a SWIFT message to a correspondent bank saying, hey, please debit our account and credit theirs. The actual settlement still happens through FedWire, through chips, or through correspondent ledgers. SWIFT just carries the instruction. And once you get that, a lot of things click into place. Remember when Russia got cut off from SWIFT in 2022? It was a huge deal because losing your messaging access basically locks you out of the global banking conversation. The settlement infrastructure still existed. The dollars still existed. But without the message, no bank knew what to do. Now, here's where it gets really interesting. In November 2025, SWIFT migrated everyone to a new messaging standard called ISO 20022. Way more structured data, way richer payment information. And then in March 2026, SWIFT announced something that would have sounded crazy 5 years ago. They're building their own blockchain shared ledger. Over 30 major financial institutions are building it with them. So the messaging layer that for 53 years insisted it just sends instructions is now becoming a settlement layer for the first time in its entire history. The cooperative that always insisted it was just a phone line for banks is now building the actual phone. All right, here's where the story really turns. November 2017, the clearinghouse, owned by 22 of the largest US banks, launched a brand new payment rail called RTP, real-time payments. This was huge. The first new US payment rail in over 40 years. RTP runs 24 hours a day, 7 days a week, settles in seconds. By 2024, it was clearing over 1 million transactions per day, and the per transaction limit got pushed to $10 million, wholesale grade. Now here's the political fight nobody talks about. The clearinghouse lobbied hard to stop the Federal Reserve from launching a competing rail. Their argument? We already built RTP. The private sector solved it. The Fed did not agree. So on July 20th, 2023, the Federal Reserve launched FedNow, the first new Fed-built payment rail since Fedwire opened in 1918. 105 years between Fed launches. And this is where Mark Gould comes in. Gould is the Federal Reserve Financial Services Chief Payments Executive, the very first person to ever hold that title, created in March 2021. 30-year Fed veteran, started in retail payments at the San Francisco Fed, ran the cash product office, then took over the Fed's entire payment portfolio just in time to launch FedNow. By Q2 2025, FedNow processed about $245 billion in a single quarter. By late 2025, over 1,400 banks were connected. And in November 2025, Gould pushed the per transaction limit to $10 million. So why does FedNow exist if RTP already exists? 2 reasons. Smaller community banks were nervous about joining a system controlled by the 22 largest US banks. FedNow gave them a Fed-run alternative. And second, the Fed simply did not want to cede the future of US instant payments to a private consortium. FedNow wasn't just a product launch. It was the Fed planting a flag. Okay, here's where it gets exciting. While everyone's debating ACH versus Fedwire versus RTP versus FedNow versus SWIFT, a startup called Modern Treasury sat on top of all of them and said, you shouldn't have to choose. Modern Treasury was founded by Dimitri Dadiomov, a former lending home executive out of Stanford. They built one API that abstracts every major US payment rail: ACH, Fedwire, RTP, FedNow, international wires, stablecoins. As of December 2025, Modern Treasury was valued around $2.26 billion, raised $183 million, processed over $400 billion in payments, and in October 2025, they acquired Beam to extend into spend management. But Modern Treasury is just one piece. Down in Singapore, there's a company called Partior. JP Morgan, DBS Bank, Standard Chartered, and Temasek created it back in 2021 as a joint venture to build a blockchain-based interbank settlement network, competing directly with correspondent banking. They closed an $80 million Series B in November 2024, led by Peak XV and Deutsche Bank. Went live with US dollars, then Singapore dollars, and in September 2025, Deutsche Bank executed the first euro transaction over Partior. CEO Humphrey Wallenbreeder joined May 2024 from a digital bank called Bunk. And then there's Fnality, UK-based wholesale settlement infrastructure, closed a $136 million Series C in September 2025, led by WisdomTree with Bank of America, Citi, and Temasek. CEO Michelle Neal took over in March 2025. And meanwhile, Swift is building its blockchain ledger with 30-plus banks. So you've got a unicorn abstracting the rails, a JP Morgan-backed Singapore startup building a blockchain alternative, a UK consortium building wholesale blockchain settlement, and Swift building its own ledger. And it gets better. The Genius Act passed in July 2024, the federal stablecoin framework. Dollar-backed stablecoins now have a legal path to act as settlement instruments. Nobody knows yet which one wins, but the conversation officially shifted from the Fed runs everything to the dollar's plumbing is being rebuilt in public. Look, when I started researching this, I assumed I knew how money moved between banks. 5 minutes in, I realized I'd been wrong about basically all of it. For 105 years, the Fed had near total control over how dollars cleared in this country. Then in 2017, the largest US banks broke that monopoly. In 2023, Mark Gould launched FedNow, and the Fed broke right back in. Now in 2025 and 2026, a $2 billion startup, a JP Morgan-backed blockchain in Singapore, a wholesale ledger in London, and Swift itself are all building the next layer at the same time. The dollar's plumbing, the thing nobody pays attention to until something breaks, is being rebuilt right now. In public, if this changed how you think about US payment rails, hit subscribe. Drop a comment. Which rail wins by 2030? FedNow, RTP, or blockchain replacement? Notion link in the description. See you in the next one.